When the markets get meaner, we learn. What's going on, guys? I have to tell you that there is a lot to look forward to on Monday, and we are here at the forefront of a brand new picture.
This should wake up the American people.
This is the official meme stock report, including all of the proposed legislation from the U.S. Committee of Financial Services. I want you guys to know that I am looking at the data for Monday, and I want you guys to know that there are giveaways, big quality of life changes, as well as the fact that we're going to make this video a lot more interactive and a lot more informative right out front. So please, if you guys wouldn't mind, slap that like and let's go straight into the video. Watch until the end because you guys gotta comment out which like you guys are. First things first, understand that we are looking at the proposed legislation in this bill. Predatory activity has been detected by certain funds, and you guys probably know which ones those are. We have been tracking the financial recession, and we want to be able to understand what this brand new report from the Congress says. I'm going to summarize the very first one. I'm going to summarize the next one, and then I'm going to bring it into a shorter format on Instagram and on TikTok so that you guys can all follow along with us. I'm going to be putting my own interpretation into these, but this is going to be the very first one. Short Sale Transparency and Market Fairness Act. Okay. It amends the Securities Exchange Act of 1934, and it's to modernize reporting requirements under Section 13F of such acts. Here's the summary, and then I'll give you the simple English version. This bill modifies the reporting requirements applicable to certain institutional investment managers that have more than $100 million in assets under management that have to require to file ownership reports with the SEC by, number one, reducing the reporting window from 45 days to 10 days after the end of each month for such asset managers, and two, expanding such reports to require reporting of direct or indirect derivative positions or interests. That includes short positions. This bill also requires the SEC to, one, issue rules for the public disclosure of short sale activity by institutional investment managers. Very cool. And two, reports on the standards and criteria determining whether confidential treatment applies to certain reports filed by institutional investment managers. So essentially, this gives us more accountability, which is, in a way, kicking the can down the bucket, kicking the can straight down the path, because who ends up being the one that answers? What kind of accountability is there even? Because at the end of the day, some of the SEC requirements here, for example, they now have to check whether or not investment managers have more than 100 million in assets under management, and then they have to also reduce the reporting window to from a month and a half to 10 days after the end of each month. So at the end of this gives a bigger incentive for people to then turn around and with less time play in invisible illegal games. This gives people a bigger track record to be able to say, hey, if you are going to rehypothecate, if you are going to pull any of these short-long position gambles and then end up hurting the investment or hurting the retail investor on the other side, you better be careful that you're not under close scrutiny by the SEC. Again, like I said, it kicks the can down the road because you are the SEC, and the SEC regulates the SEC. Now, that said, if the House committee wants to be able to appoint a different like sub-budgetary committee to be able to make sure this happens, I'm interested. The status of this so far is that it's been introduced in the House of Representatives and referred to the House Committee on Financial Services on July 22, 2021. Its consideration and markup sessions are held on the July 28th, July 29th, and then ordered to be reported in nature substitute by yeas and nays 27 to 22 on July 29, 2021. So in that case, that is the very, very first proposal right there. Okay, so guys, remember that at the end of this, I'm going to ask you which of these you think is going to make huge changes, so make sure to comment when we get there. Second one, we have HR 4685, Trading Isn't a Game Act. This is going to be a little bit of a completely different head spin, which is why we changed the music here. HR 4685, Trading Isn't a Game Act. It requires the Government Accountability Office to carry out a study on the impact of gamification, psychological nudges, and other design techniques used by online trading platforms and for other purposes. So once again, the summarization first, and then my take on what it means. This bill will require the GAO to conduct a study on the impact of gamification, psychological nudges, and other design techniques by online trading platforms, including whether such techniques are detrimental to investors or empower them, inform them, and educate them among other potential impacts. The Comptroller General of the GAO would be required to issue the report within 270 days to the Office of the Investor Advocate in the SEC and Congress. The Investor Advocate shall then review the report and issue any regulatory or legislative recommendations within 90 days. So easy to be able to take into perspective that this is, again, self-governance. You are appointing a brand new subcommittee organization and then requiring them to conduct a study on what the gambling effects are of a bunch of lights lighting up in your app and whether or not that is going to be, problematic. What's more interesting is the status. It was introduced on July 26th in 2021. It was marked up on July 29th. 28 yays to 23 nays on the 29th of July, and then reported by the House Committee and placed under Union Calendar January 20th, 2022. So this is a little bit more advanced than the last one, but at the end of the day, this is about self-governance. It's about creating a report that could end up being a similar report to this one. We've been waiting for this report for such a long time. It may end up just saying gamification is bad. Well, what do you guys think? If you guys think gamification has a certain role in the market and in capitalism and in general, like ways to invest, should it be part of your day-to-day life? I'm actually really interested in what you guys think. This next HR actually does not even have a number. Actually, this is the one that we are going to cover right now, and then direct it right back to we're going to direct it right back to TikTok and Instagram so you guys can see the next two in a shorter format to see what you guys like to consume. So this amends the Security Act of 1934 to establish certain requirements with respect to retail investor options trading and for other purposes. This discussion draft would require enhancements for retail customers who engage in options trading, including preventing broker-dealers from offering retail customers monetary and non-monetary incentives that encourage options trading, and would require broker-dealers to disclose to customers the percentage of broker-dealers' retail client accounts that lose money on such options trading. I think that last piece is pretty important. And the fact of the matter is, you can lose a ton of money on options, and making it harder for invisible option walls, as well as deliberately in the money calls, will make it a little bit easier for everyone to catch what these option chains are actually doing, because there's a lot of different incentives and higher level mathematical conclusions that you can immediately get to if you are familiar with how these options are. However, a lot of it is opaque, and at the end of the day, if a lot of the money ends up out of the money, you can't really disclose that by which firm and which fund and ended up with which position. So that's really important to remember, that this is about options. Okay, 3 completely different tactics and completely different proposals. Which one do you guys think is going to be the one that is the most important out of these 3? The next 2, like I said, I'm going to be giving away some of these apes over on Instagram. It's Andrew Mo Money. I'm going to be chopping this up into a little bit more engaging, a little bit more easy to digest pieces. I'm going to be covering HR 4617, which requires the SEC to carry out a study on payment for order flow, and 4619. Who knows what that one is? So if you guys want to know the last 2 proposals, and if you guys want to be able to follow this channel in easier to digest ways, I recommend following on TikTok and Instagram. It's Andrew Mo Money on both places, and you might already see a video in the very near future about these 2 proposals. So once again, thanks for watching. Thanks to those of you who make this show possible by pressing that Patreon button or by pressing that join button next to the subscribe button. Consider subscribing and hitting that alert button if you guys have liked this video, found it educational, entertaining, and I'll see all of you in the money. Peace.